Hello and welcome back. Before we get started today learning how to take care of our family the biblical way, let's review the last lesson first. In the last lesson, we covered the principle of biblical stewardship. As stewards, we are placed in charge of God's resources. This goes all the way back to the creation week, when God placed Adam and Eve in the garden to work it and keep it. He created the world and its resources to be put into our service. We plan and create and build and develop, very similar to what God did, but we are to do it to His glory. To be good stewards, you have to understand your King's requirements. Your wants and desires need to be properly aligned with God's so that you deploy the resources and skills and talents that He gave you in the best way possible. Different human philosophies and psychologies want to say that people desire this thing or that thing most, whether it be money or food or power or fame and fortune or something else. They say those desires are what motivate us to act. But Jesus said otherwise. He said you should first seek God's kingdom and His righteousness, and then all the other necessities will be given to you. God will never let you waste away if you are serving Him. King David, reflecting on a lifetime of service to God, including all of his sins, successes, and failures, wrote down in the Psalms that, "I was young and now am old. I have never seen the righteous person abandoned or his children begging for bread." As long as you always put God's interests at the top of your list and make them your own, you'll not be abandoned or wanting for the basics of life either. And so part of that is understanding the kingdom of God, that it's bigger than just the building you go to church in on Sundays. You are a representative of God in all that you do, at home, at work, on a business trip with coworkers, dining with friends, playing with your children. So whatever you do, whether you eat or drink or whatever you do it for the glory of God. Honor God in your finances by paying His tithe. Honor Him in your business or work dealings by conducting your professional affairs according to His laws and commandments as He revealed them in Scripture. As you do so, power, authority, and influence will flow your way. Through you, Christ will extend His kingdom. Using your wealth is a legitimate means of extending Christ's influence. If you are wealthy, then you can fund kingdom-advancing projects that no one else will or wants to do. Remember, wealth is a legitimate tool of influence. It is not to be despised. The Bible says that the love of money is the root of all kinds of evil. It does not say that money is the root of all evil. Money is a tool. What matters is how you use it. Jesus said that how you spend your money reveals what you really believe in your heart. That's why you must straighten up your finances and your budget and align them with God's interests. Now today, we talk about using your money to take care of your family. Because if you can't take care of your family, then you cannot legitimately extend your influence beyond your family. There are serious warnings against failing to provide for your family. The Apostle Paul said, "Someone like that is worse than a heathen or unbeliever." Today's lesson will make sure that you do not stumble here. The Bible teaches a hierarchy of social responsibility. This means that because we have limited resources, we should take care of some people before we take care of others. It's not healthy for ourselves or for God's kingdom for us to break that order. You can think of this as circles of service. You take care of the inner circles before moving to the outer ones. Or think of it as a bubbling spring. When it first bubbles up, it moistens the ground around it. But as it continues to well up, it flows steadily outward. Your responsibility begins first with yourself and your family. You're at the center of your earthly responsibilities. You must take care of yourself so that you have the financial means, the mental capacity, the courage, the confidence, and the faith to take care of others. Generally, only once you've begun taking care of your family should you then begin using your resources to extend aid to others. That's in part what this course will help you do. It will help you begin generating a surplus that will overflow into the world around you. The greater your surplus, the more people you can help, all in Jesus' name. You must not be confused on this point. You absolutely must take care of your family first. The Apostle Paul is very clear about this. In a key verse we read, "But if someone does not provide for his own relatives, especially for those of his own household, he has denied the faith and is worse than an unbeliever." Paul is saying that taking care of your family is very closely linked to your salvation. And that's because faith and deed go hand in hand. Your word of faith must be followed by the fruits or works of faithfulness in life. Taking care of our family is an act of faithfulness. When you take care of your family, you are being obedient to Christ's commands. This also works both ways. In the same chapter, Paul explains that the church should not be the first line of defense in helping widows who have living relatives. We read, "Honor widows, the real widows. But if a widow has children or grandchildren, let them first learn to show honor in their own household. Let them repay their parents, because this is pleasing to God." There are important implications that flow from Paul's teaching. First, it shows that you should be prepared to care for your relatives beyond your immediate family members. Parents and grandparents ought to be able to live in comfort knowing that their children or grandchildren will intercede to help them if they need it. Second, it tells us that children have an obligation to help their parents. Paul uses the word repay, meaning there is a kind of debt owed from children to parents. The parents may not necessarily need to call this loan, in a manner of speaking, if they have the means to support themselves without the need of their children. But the Bible teaches that they certainly have the right to do so, which means the children need to be financially and mentally prepared to do so should the need arise. And third, Paul is admitting a very practical truth of economics. Church resources are limited. We don't have unlimited money. We don't have unlimited time. Not even the church has these things right now. And so the church should not be the first line of defense in helping people who still have able-bodied family members who can and should step up. Because the church's resources are limited, this means she must ration them. She must be a faithful steward too. And this means ranking people according to their need. Faithful stewardship places great responsibility on you to take care of your family so that you can unburden the church as much as possible. If you are able to mitigate an emergency or a financial disaster through good and responsible planning, then you are making sure the church won't have to pay the bill. You are allowing it to spread those resources to people who need them because you planned ahead. Now, there are 5 main areas where you need to take action here to ensure your family is provided for. These are basic. If you do not have these 5 items addressed already in your budget, then after you start tithing, or at least in parallel with it, you need to get these items in place immediately. They will cost money, so you must budget for them. The main areas are life insurance, auto insurance, homeowners insurance, health insurance, and long-term disability insurance. In this lesson, I'm going to focus primarily on life insurance because there are critical aspects of it that are rarely discussed. I will then briefly cover the others before we close. Now, etch this into your mind. The purpose of insurance is not to make you rich, but to preserve your assets and protect your family from unpredictable tragedy. Thanks to the miracle of the modern economy, in exchange for a small fee, life insurance lets you take advantage of statistics and the law of large numbers. That lets you transfer substantial risk to the insurance company. Catastrophic events are unlikely to happen to most people, so the insurance company, in most cases, doesn't have to pay a claim. It simply gets to pocket your fees, which are called premiums. But if they do, then they collect enough premiums from enough people to afford the payout without going out of business. It's a great benefit, and you would be negligent if you didn't take advantage of it. The purpose of life insurance, then, is to replace your income if you die unexpectedly. The first way you must unburden the church is by preparing for your family to be provided for in the unlikely event of your premature death. This is why a life insurance policy is so important. It is so cheap in our modern world, and yet it is surprising how many husbands die and leave their wife and children in poverty. There are two kinds of life insurance, term and whole life, or a variation of it that may go by different terms or names like variable or universal. One of the best ways to describe whole life, or its variants, is to describe it as a combination of a term life policy and a savings account. A term life policy is what you should buy. They provide a cheap way to secure a large amount of coverage for your family should you die. A good rule of thumb is that you should get a policy valued for at least 10 times your annual income. This way, your family will not have to immediately worry about finding other ways to replace your income. It will give them time, which they will need as they grieve over your loss. No husband should want his widow to have to worry about immediately getting a job or finding another husband in the wake of his death. This kind of time pressure, combined with tremendous grief, can lead to bad decisions. Here are the rules. The wife should buy the term policy on her husband, which should be 10 times his salary. She should be both the beneficiary and the owner. The husband should also buy a term policy on his wife. He should be the owner and the beneficiary of his wife's policy. When a wife dies and leaves her husband behind with the children, the husband is going to need to find some variation of child care, house care, or both to replace the invaluable work performed by his wife. This is especially true if the children are homeschooled by his wife. If this was a dual income household and the husband relied on his wife's income to supplement his own, then he will need to replace that income. If the wife doesn't work, then the value of her policy should be at a minimum 2.5 times her husband's annual salary, and preferably 5 times that or more if you can afford it. If she does work, then the value should be at least 10 times her salary, just like her husband's policy. Let me emphasize something crucial. In both cases, now listen up, pay very careful attention to this because this is something that many people may not explain. The policy should be owned by the opposite spouse. Why? If the husband makes $100,000 a year, then he should have a $1 million term life policy owned by his wife, with his wife also named as beneficiary. This protects the wife in case her husband runs off with another woman. Think about it. If he owns the policy and he runs off with another woman, then there's nothing stopping him from simply changing the beneficiary of the policy to be his new wife or girlfriend. Now, the thought that a husband would deprive his rightful wife and mother of his children the death benefit of his life insurance policy is unconscionable, but no Christian man should want this to happen to his wife. A Christian man should be happy to protect his wife and children from this kind of evil. And the same thing goes for the wife. So to repeat, the wife should both be named the beneficiary and own the policy on her husband. And the husband should both be named the beneficiary and own the policy on his wife. This protects the victim of adultery or abandonment from losing the death benefit on their spouse's life. Lastly, the policies should not only be owned by the opposite spouse, but they should be paid for out of separately owned banking accounts. Paying for the insurance policy out of a separately owned bank account adds another layer of protection for the victim's spouse by preventing a wicked spouse from simply defaulting on the policy, stop paying it. This will prevent the courts from disputing the rightful owner of the death benefit. It will also prevent a philandering or deadbeat husband from simply stopping payment on the policy should he leave his wife. And again, the same thing goes for the wife. The policy on her life should be owned by the husband and paid for out of his own separate banking account. Now, the probability of you or a family member getting killed in a car accident is very low. But if it does happen, your life insurance policy should cover this. Confirm with your insurance company first, just to be certain. In most places, it is a legal requirement that you have auto insurance, or else you cannot legally drive an automobile. Basically, car insurance is how you protect yourself from financial ruin caused by a car accident that results in substantial property damage, bodily injury, or death. The role of car insurance is not to replace your vehicle. It would be nice to have the insurance company pay for a replacement, but that rarely happens. The cash value the insurance company will price your vehicle at is usually less than it would actually cost to replace it. You will get a tiny check from them that will rarely be enough to buy a replacement. Now, homeowners insurance is how you protect yourself and your possessions from something devastating that happens to your house, like a fire. Your policy should cover the replacement cost, or even the guaranteed replacement cost of your house, instead of, say, the actual cash value. It should cover all your valuables inside too. Now, health insurance is meant to protect you from being bankrupted by a medical emergency or even routine health-related expenses. Most people are healthy and won't spend a lot of money at the hospital. But this is not the case if you contract a chronic or terminal illness like cancer. Treatments can last months or years and cost millions of dollars. Your health insurance is mostly intended to cover these extreme cases, but it is also valuable for moderately serious accidents like broken bones. The daily cost for staying in hospitals sometimes averages $2,000 or more, thousands of dollars. This can quickly climb into the tens or hundreds of thousands of dollars. To keep healthcare premiums down, as a Christian, you should consider joining a health sharing ministry. At least for now, until the politicians change the rules, these still exist. Monthly payments can be less than traditional health insurance, and your money usually goes directly to a family who has an immediate need. Now, one last kind of insurance you should consider buying, if you can afford it, is long-term disability insurance. It's usually cheap. Long-term disability insurance protects you in the event that a serious accident, illness, or injury disables you so that you are unable to work for a long time. Now, the statistics on this are staggering. Over 25% of today's 20-year-olds should expect to be disabled and unable to work for at least a year before they reach retirement age. The 5 most common long-term disability claims are musculoskeletal disorders, cancer, pregnancy, mental health issues, and injuries like fractures, sprains, and strains. Medical problems contribute to half of all mortgage foreclosure filings. That means that people get hit with a medical emergency and then they lose their house. Long-term disability policies will help protect you from the bulk of these problems. Some employers provide short-term disability insurance that lasts for, say, the first 90 days, 3 months. And the long-term policy then should kick in after those 90 days. Your emergency fund, if nothing else, could be used to cover those first 90 days also. Now lastly, here's a general rule that's applicable to most types of insurance. To reduce your insurance premium, request a larger deductible. This will lower your annual insurance expense, and you should have enough money in your emergency fund to cover the deductible. Now, it is your duty to take care of your family and to unburden the church as much as possible. That's because it is the church's duty to take care of its members when their needs exceed the capacity of their families. Thanks to the developments and advancements of our modern world, we have access to insurance. Insurance is a cheap way to protect ourselves and our families from random, unpredictable disasters that could otherwise devastate our finances. If you have not already, it is imperative that you buy term life policies for yourself and your spouse if you're married. Each should own the others. This will protect you, them, and the church from a sudden loss of income, a wicked spouse, or both. For the other policy types, opt for larger deductibles to reduce your premium. Your emergency fund should have enough in it to cover the deductible. This will save you money over the long run with smaller premiums, and we'll talk more about how to stock your emergency fund in the future. People who cannot accumulate a large enough savings to afford paying a higher deductible suffer for it in the form of larger premiums. You, however, by implementing this program, will not have the same problem. In the next lesson, we will talk about the rules of righteous living and the important role that it will have for you in the accumulation of lifelong wealth.